Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Friday, June 5th, 2009. We begin today's broadcast with a look at the dollar-pound pair, which fell for a third straight day as Gordon Brown attempted to salvage the political upheaval in his government by reshuffling his cabinet following the resignation of two more of his ministers. The pound has seen a steep 700 pip slide since the pair hit a line of long-term resistance at the 1.6650 level on Wednesday. Today, the pair fell below the 1.60 level, reaching 1.5940 in late New York trading. That puts the pair below where it started the week. There was a strong spike upward following the release of the U.S. non-farm payroll report, but those gains by the pound were short-lived, and today's overall fall amounted to about 240 pips. The euro-pound pair, after climbing in the Asian session to the 0.8865 level, fell back down in favor of the pound the rest of the session. The pound reclaimed the 0.8740 level after two straight sessions of euro gains on the back of the political turmoil in the UK. In the US, the non-farm payroll report showed that the US economy shed 345,000 jobs in May, a figure that came in much better than the expected 520,000 decline forecast by economists. It's the smallest amount of job losses in 8 months, though the unemployment rate did still move higher to 9.4%, a large jump from April. The smaller job loss figure is a welcome sign, as it can imply that the recession in the U.S. is easing and the strain on the labor market is receding as well. Figures for April were revised to show a smaller amount of job losses there as well. The jump in the unemployment rate, which is now at its highest level since 1982, has to do with more people that had not been looking for work joining the labor force. The better-than-expected non-farm release caused some strong moves in currency markets. The correlation recently between better U.S. news boosting risk appetite had been weakening the dollar as it lost its safe haven appeal. Today, however, the better report supported the greenback as it implied that the U.S. economy may be coming out of its recession sooner than the other major economies. At first, the euro rose to the 1.4260 level, but that move upward proved to be a clear-out action before the euro slid 300 pips from that high. The pair fell all the way to the 1.3930 level, after pausing near the 1.40 level. The dollar-yen pair shot up 200 pips following the non-farm payroll release, breaking past last week's high. The rally stalled near the 97.80 level as that represented a longer-term trendline of resistance, but in later New York trading, the pair rose above that, reaching the 98.50 area to set its high for the day. We documented this week how the pair broke out of its consolidation pattern, and following today's breakout, the pair may be poised to rally further next week with the next level of resistance at the 99.50 level. In Canada, the economy there shed 41.8 thousand jobs, more than expected, and the unemployment rate increased to 8.4%. May's losses follow a month where jobs rose. In addition to manufacturing losses in May, transportation and warehousing also declined. Public administration was the only industry with a notable employment increase. The US dollar-Canadian dollar pair, which has seen a rather volatile week, rose today to the 1.12 level. The greenback paired its losses from yesterday as the loonie was pressured by its job data and the US was boosted by its non-farm payroll report. This pair formed a double bottom earlier in the week, and yesterday's price action tested Tuesday's resistance, which has now turned to support. That validated the previous up move, and now the pair is testing its support from last week. The greenback gained against the other commodity currencies, the Aussie and Kiwi as well, though those currencies rose against the yen. Next week will be lighter in terms of important releases following this week, but there are still some important fundamentals to keep your eye on. Australia will post data on home loans and employment. The US will release reports on its trade balance and retail sales. The UK posts data on manufacturing production, and New Zealand Central Bank will conclude its interest rate meeting. And that wraps up our coverage of the Forex market for this week. Thank you for joining us here at CMSFX.com, and from all of us here at CMS Forex, have a great weekend.